bunch of she's got a bunch of properties, and she likes this idea of yeah, I just she didn't have to deal with so much paperwork and process. It was just very streamlined.
Yeah.
So um, yeah, so they're still actively investing, but it was a new experience for her. She just used to a ton of paperwork that they got to do because they I think they own, I don't know, six or eight properties now, and um, obviously that gets complicated on a traditional loan on all the paperwork needed.
Right, right. Are you in all 50 states or?
So um, yeah, Nexa is in all but two states, and those two states are Massachusetts and New York. Um, I think it may be a matter of within the next few months as far as Massachusetts being on there as well.
Okay.
Um, and then they've got some other areas, like for example, they have lenders that will do Puerto Rico,
Hmm.
and so they're working on some ideas. It's actually the largest broker in the country, and the thing that's valuable about that is it allows a much broader range of lenders. Like if you're on the smaller side as a broker, the concept is still great. You're a broker, but you don't have enough volume to have a whole lot of relationships. Like
Hmm.
lenders want to see you bringing them business. So, like with our brokerage, I mean, it's not I don't own the company, but represent it. We've got like about 260 different lender relationships.
Oh,
So,
wow. Okay.
um, so yeah, and that broadens the kind of things we do as well. Because we also get involved with commercial loans and business loans, and um, yeah, so it's some things that we've connected with some niche lenders who do things that literally 90% of the people in the industry don't do, but somehow these guys have figured out a way to make sense of it, and they'll say yes on a loan that everybody else says. One of the basics is credit scores, so
Hmm.
people that will do a deeper dive on somebody's story and not just look at the score.
Hmm. Got it. Yeah. Well, if I get your info, I'm looking to do one. Hopefully, maybe mid 2025 would be the next. So I'm in Central
Yeah, it's
Texas,
worth.
so yeah.
Yeah, like what you were saying a couple minutes ago about the 8%. It's the way things are right now. Yeah, it's worth keeping an eye on it week to week. Is
Yep.
what's going to trigger, further reduction in the
Right.
rates. There's a lot of speculation, but sometimes it hits sooner than we might think. But
Hey, Brendan,
yeah,
on your property, is that single family or multi?
Single family. Just one. Yeah.
Hey, you guys that are just jumping in, we were just chatting with Mark Simon. He's with Nexa Mortgage. If you have any lending questions.
Hey, I have one. This is Anna.
yes,
Anna K. Hey, so I'm in Washington State, and I have two next I guess lenders who come to our local meetup groups, and the two were on a different office. I guess they are in a different locations or whatever, but they were both in near uh where I'm at. They sometimes they have different rates and different um what do you call it? What they say is different, so I tend to go with one than the other, and then I hear something else. So even like a company like Nexa within the same state, um what the products that you offer are all different. I mean, how do I make out of it? Just because it's a mortgage brokers, you are looking at the different sets of products that might go through, or
yeah. So as a broker, and I'm not sure when you jumped in, but I was sharing with the other guys that yeah, the largest broker in the country. So the menu goes really deep on some things that are sometimes kind of obscure, or the underwriting, like some lenders that, they're not these big names that we know, and they got 3 or 4 branches or whatever, and they'll do some things that other people don't. So yeah, so it's just addressing each scenario that you have, and then I can check into something and see if there's somebody that's a fit for that. Is there a particular type of property that you're usually doing, or
Um, no, I think I was asking about refinancing at that time.
refinancing?
Refinancing, yeah. Refinancing,
Okay.
cash out refinancing. And yeah, it's been a while. I haven't really, you know, I think I'm gonna do it soon, but now that things are kind of settling down around me, but that time I was pretty actively thinking about refinancing and kind of missed the boat. So that's what I was trying to do. But the 2 people from the 2 offices of the same Nexa uh, gave me different ideas. So, that was kind of confusing. So,
Yeah, I try to kind of put it in terms that make sense, uh, and then if there's some unusual situation, then we can get somebody else on the line, like directly with the lender that sees this stuff every day. Um, the kind of properties that would be involved in your refinancing, what kind of properties are those? Are they just regular single family homes or something different? Or
it's a duplex. But so when you say Nexa, within a state, maybe within the same county, I guess.
I'm sorry,
The
I was
fees
having a
are
hard time hearing you.
Oh, okay. Sorry, I'm outside and try to do from my cell phone. Can you hear me okay?
Yes.
Okay. So, um, when you have a 2 Nexa offices within the same state, uh, in near each other, the fees are the same, or the fees gonna be different?
Um, in terms of working with one lender versus another, is that what you mean? Like, are the fees going to be
Yeah,
the same?
yeah,
Yeah. So,
within Nexa.
so there's certain, yeah. So there's certain. Were you saying within Nexa?
Yeah,
Did
so
you
there
say?
are two lenders who are both Nexa. They are, you know, in a different offices, but they are locations, but they are representative from Nexa.
Okay, I hear. Okay, I hear what you're saying. Yeah. So with fees, um, when you go through like a whole sheet of the fees on any given loan, there's a few things that would be pretty identical. Maybe the appraisal fee, the credit report fee. I mean, a few things might be fairly identical. And then you get into um, a couple things that can vary. I mean, title doesn't vary dramatically, but it can somewhat. Sometimes, like I always try to connect with somebody on title that we really got a good trail on them. Like, that can be a real disaster story with, some obscure company and says, yeah, we're going to do it for less than everybody else in the marketplace. And um, but so in terms of the broker compensation and the cost for a given rate, I mean, like sometimes that could vary. Like everything's identical, but the cost in that category might vary. With a different individual. Um, so yeah,
Okay,
but
I
I
I
try to
follow along. Yeah.
I try to structure it in a way that, for each
Uh-huh.
individual situation, and um, not hitting people up with a lot of unnecessary stuff. Um,
Yeah.
everybody's got a different agenda. I mean, like we get people who they might be thinking, oh, they're buying this property, but they know they're not even going to keep it for the long term. And so they're looking at fees and cost in a different way than the person that says, I'm buying it today. I'm going to keep it for the next 20 years. And, the fees become a bit less significant spread out over those years. Like if they could capture a lower rate and keep it there for, the next 20 years, that's more significant than somebody says, I'm going to get rid of the property in 5 years. So yeah, it try to adapt to whatever the individual investor's situation is, what's going to serve them best. And it's knowing it's not one size fits all. Yeah.
Yeah. Okay. Well, thank you very much.
Yeah.
Chester,
Glad to.
Chester, you have a question? He's coming. Okay, we'll come back to Chester. Olga, did you have a question?
No, no questions so far. I'm just
Just listening. Okay. Have you been with us yet? Is this your first time here?
yes, that's my first time in meetings like this. I just joined the school.
Okay, great. Glad you're here. If you have any questions or anything, just check in. You can put it in the chat or raise your hand or just let us know what your question is. I'm not sure how long we'll go tonight, guys, being tomorrow's Thanksgiving. So I think we'll probably be cutting it pretty short, like an hour, hour and a half. Olga, usually we go for 3 hours. So you don't have to stay the whole time. You can pop in and out at your convenience. We're pretty informal, but most of the people here with us tonight are here every week. So there's people from all over the country doing all kinds of different things. I'm in California investing in the Midwest. Anna, who was just talking, she's in Washington. Sam's in Texas. Jason's in Chicago. Robert, you're in New Hampshire.
Yep.
So welcome. Are you able to talk now, Chester?
Yeah, thanks, Frank. Yeah, so Mark, definitely thank you for joining the call this evening. Excuse me. I did miss
good to be with you.
Yeah, no, definitely appreciate your time. I did miss the first I don't know, 5 to 10 minutes or so. I So I apologize, didn't get to kind of hear like the opening or outset. The couple of questions that I do have, like I am investing in Detroit or the Detroit area, if you want to call it, as far as like Metro Detroit. The question that I wanted to know about, well, I guess it's really a couple. The first was there are properties that can go as low as like I think the lowest that I've seen is like 80,000. And with respect to, let's say a traditional LTV of like 75%, how low does Nexa go with respect to lending out
Like
based on a
the loan
property
to value.
value? Mm-hmm.
So, yeah, so like you were saying, 75% is a pretty common number. I mean, some are 70 but there are some lenders, depending on the package, that might allow a greater number, as far as getting up to 80 or that's, yeah. And I mean, it depends on what it is. It is like what you're doing. Is it properties that you're holding on to or you're flipping them or?
Oh yeah, these are going to be all buy and hold. There's no like short term or midterm or flip or anything like that.
Okay. Are they properties where they're already as is to go, or there needs some significant repairs to be rentable, or
At least the ones that I'm looking at initially, kind of at the outset, they would be, I guess for lack of a better phrase, you want to call it turnkey or turnkey light, where like maybe
yeah,
at most a few $1,000s to just kind of bring it, all the way up to whether it be standard or code or whatever you want to call it.
yeah, right, right. Okay, yeah, because that makes a difference. Because I'm thinking of lenders that they're geared towards. Um, I mean, we have all those options, but some of these that are geared towards the one that's like needs serious work, like tens of
Okay.
thousands of dollars of work, and the guy bought it for some crazy great price, and he knows that, yeah, he's putting a lot into it, but it's going to be worth well above his investment. So, but yeah, so in what you're describing, um, I can check through that list more thorough, like who goes further, than that 70, 75 or 80%. Because I think there are a couple of people out there that are, um, allowing a bit more on some of these investments. And those are single family type homes?
Yeah, there's generally single family, but I am looking at dupes, tries, and fours that are
Okay.
in the same range.
Yeah. Um, and you mentioned about 80,000. So is that a common number, or how would you?
That's the lowest. I'd say, like, if you want to call median. It does kind of depend on which various area codes. But I'd
Yeah,
say the most common median, let's call it like 150
yeah.
range.
That's that's like the market you're in, like 80 to 150.
Yeah, 80s on the low end. I have seen some as high as like 330, but like those are just like way, way outside of the range. So like, yeah, like the normal upper end is like, let's call it like 250, 275. So yeah, put the median, let's call it like 150.
Yeah. Yeah. So the short version of you were mentioning, like you came in a few minutes late, is so Nexa is nationwide, and right now we're in 48 states, um, Puerto Rico, and a couple other areas beyond the basic states. And so, as the largest broker, it's allowed the company to represent a lot of lenders. So we get some really obscure lenders that figured things out, and they just made a niche of doing some things that most of the industry don't want to do. And that could be, a lower credit score. It could be somebody self-employed who's making great money, but their taxes look like they barely make anything. And, so there's the DSCR product, or there's products that are based around bank statements and assets. And so, like 260 different lenders, but that's residential, commercial, and some business type loans as well.
Okay.
And Mark, your minimum loan amount, is that 50K?
No, I would say, depending on the nature of the loan, there's loans that we've actually been able to get through that are actually under 50, but that's a little tricky. I mean, it's doable. It's a little tricky territory in terms of just, you have certain fixed costs, title and things that got to get done. And but the bottom line is, yeah, um, doing loans that are 50 or even a little below that is doable. And that's related to just a regular mortgage. I mean, when it comes to an equity line or something like that, then that could be considerably less than that.
Hmm. Okay. And
And they go to the other extreme as well. I mean, there's, loans that commercial loans that, are millions of dollars on, purchase of a property. So mixed use commercial things. And Somebody's got like a retail space on the bottom and 3 rentals on the top. And
Hmm. Okay. The other question I was gonna ask was, I guess, kind of on that other, the higher end spectrum type of range in terms, well, and maybe not necessarily the highest, but in terms of like portfolio loans. Say, for example, you know, 3, 4 single families that, got with, 4 different lenders, want to consolidate them all under one portfolio loan. Is that something that Nexa offers?
yeah, that would be an option as well. You got to put that all together. And would that be something like you have it in an LLC already? And
I don't have an LLC. I would
yeah,
keep everything in my name.
okay. Yeah. And I mean, if that's something you're exploring, it's something I can get fuller details for you on something like that as well. Like, what does that look like to put that all into under one umbrella?
Okay.
Was it,
Okay. Yeah.
was that
Oh, go ahead.
still, was that Chester? Was that Chester you were
Yes.
asking? Yeah, okay.
Yeah. Yep.
Yeah, I can see
Definitely. For
a
sure.
little more detailed what's entailed with that. I mean, some of these things, like there's all sorts of things we do, but they're not necessarily what I'm doing day to day, but it's totally doable. And then, we just bring somebody else in the picture who's done it 50 times before to get into all the fine print of it, well before you're committing to doing anything. But um,
Gotcha.
yeah, there's all
Okay.
sorts of things they do. And it's like, you get in the commercial realm and you have a different set of issues, but like there's loans that a lot of these commercial lenders don't want to do. And then there's people that made a niche of doing those. Like you wouldn't think, you would think a church loan, for example, is a conservative thing, but a lot of lenders don't want to do that. And then you get others like gas stations, and because you got all this environmental stuff. But then there's lenders who will finance that market and the mixed use things. I mean, I think I might be accurate in saying a lot of times guys who are doing what you're doing with residential might dive into something like that at some point because you've got a little retail space and then they got multiple apartments on top of it or some other configuration like that where it's a mixture of a commercial space and some rentals.
Okay. Yeah, that definitely makes sense. Okay, and I think Frank, you had put Mark's email, I want to say, in the chat. Is that right?
I put Mark's email in the chat. Yes.
Okay. Awesome.
Yeah, definitely reach out. He's super helpful. And like you said, I think a lot of the stuff that we need to ask him, it goes on a case by case basis. And I was talking to him about our situation. You guys know I was trying to get a HELOC on one of the properties we own outright. And Mark, I was going to follow up with a question about that. Pretty much our situation, but we have the property that I was trying to get the HELOC on. The tenant moved out of, and it needs a little bit of repair. And with that unit, we have 3 vacant units. Would having those 3 units filled help the situation, even if we were looking at something in the DSCR world, or does that really matter?
Yeah. No, you would get better terms with it. A couple things that affect getting the best terms on the DSCR would be, they look at, okay, what's typical market rates for that type of property in that area, and then what are you getting for rents? And so, and then what's the ratio between that and what the mortgage payment's going to be? So when there's a good number on the rent, that helps. But then also, yeah, it's helpful. I'd have to kind of walk through a specific example to give you a more precise number, like what's the difference between occupied and unoccupied. But the short answer would be, yeah, it's going to be a more positive rate on the occupied property. But it is actually doable to get the DSCR product without it being rented out. Like they'll do an assessment of it. Okay, here's what the property value is, and here's what the market rates are for rents, and so yeah, it doesn't have to be occupied to get a loan like that.
And to get like rental comps and stuff, do you lenders have, like, is there a special place you go that we can't go to look at comps, or do you just do stuff like Rentometer or Zillow or things like that?
Yeah, I don't think Zillow would be really the source, because that seems to be all over the place, as far as sometimes they're really right on and other times they're way off. But yeah, so they have, I guess, some internal resources that might not be the same, like I don't know if anybody in the line is, besides being an investor, is a realtor, so realtors have that up-to-date MLS listings of what has sold, even last week or whatever. Yeah, I think what they come up with is reasonable compared to what anybody here would be able to access. Like I was saying, I think I feel comfortable saying that like Zillow is not so much a go-to for the most accurate pulse on the area.
Okay.
Hi, I have a question. I wonder if that's the good time to ask now.
Yeah, of course.
Sure.
So, we're starting to get some motion and motivation to go after another property to invest in. We have a paid in full single family house, and we're considering which way to go, either cash out refinance or a DSCR loan on that property, and what are the main differences, the time frame, fees, and terms on this product.
So the property you mentioned that you own free and clear, that's an investment property. It's not your personal home.
It was a personal residence, but now it is an investment property for 2 years now.
Okay. Yeah, where I was going and getting that clarified is, like sometimes people will tap their personal property for cash because the rates are always better than what they are for the investor. It's not a big swing necessarily, but still the rate is better. But so yeah, so you could probably tap that cash pretty easily on a free and clear property. Yes, and is that the only property you own, or you have some others?
We have few more, but they're like on a lower end of equity, so it doesn't make sense to refinance or HELOC doing any of this.
Right.
So I wonder if DSCR time-wise, it's same like 1 to 2 months for the process to get the money out.
I would say, as a generality of thinking about a couple of specific lenders, that like lenders vary. Some are really on the better than average scale in terms of how quickly they get it done, and the others that are at the slower end. So if it was something that can fit in with one of those that's quicker, yeah, I wouldn't see that being a 2-month process. It's like if today you're handing over all the documents and the things that are needed and the file is set up well day one, I mean, that could certainly be something that's done inside of 30 days. And the DSCR is more streamlined on how much paperwork they want, because they're looking at the value of the property and the rental income potential or that already exists on the property, versus a more traditional loan. They want to do a deeper assessment of your financial story, as a whole. Like, you could be making 30,000 a year or 300,000, and that doesn't matter in the DSCR loan. It's they want to see a score, depending on the lender, a score that's okay, but they're not doing a whole debt to income assessment of everything else you're doing. It's all focused on that one property.
Yeah, that will be much more beneficial when properties add up, and then you have to look for association papers and stuff like this for everyone, for each property. And it's definitely a process. And is it also 30 days, you mentioned, for like time frame around this area for DSCR, or it's less?
But at this time of the year, did you say?
Yes, like if to
I
do it
think-
tomorrow, what to expect?
Yeah. So, I think the best way to answer that, honestly, would be, yeah, like if somebody's handing over everything that's needed day one, and here we are, essentially just shy of December 1st, it could be realistic to have that done, yeah, by the end of the year. Now, if somebody's coming in December, you don't get the full benefit, the full month, because there's a few days off there with Christmas and New Year's. So, but if you're starting like at the very beginning of the month, it would still be realistic to pull that off.
Got it.
Assuming, there's a couple things that are always out of the control of the lender as far as the title people and the appraisal people, but assuming they're timely as well, then the 30 days, yeah, would still work.
Understand.
Yeah.
Okay, thank you.
Because
And
sometimes
what are
you have another thing going on with lenders when you get into this time of the year, and that is they ideally like to not have things hanging over into the new year. They want to get a few more loans in to make the books look good for the year. So it can also work in a positive way.
Okay, good. And what about the terms? Are all the DSCR have same general terms, or they vary by the lender? We should shop around and compare.
Yeah, like we have, I don't know what our total count is on, like I say, we've got 260 lenders, and out of those, not everybody does the same thing, but I'm probably not stretching it to say that whether it's a couple dozen or, maybe it's less, but we have a number of different lenders that do DSCR. So yeah, certain lenders will have underwriting that varies from another lender. But
And do they all
so
have?
that's not identical.
Okay.
I'm sorry, go ahead.
Yeah, one thing that shies away from this DSCR is that the prepayment penalty. Is that a thing for all of those? Is it
No.
same terms or different?
Right. There may be some lenders that do that, but yeah, a couple of the lenders I'm thinking of that are quicker than average as well. Like, yeah, they don't do any prepayment penalty.
Okay. Well, that's great.
The only thing I try to clear up to fully qualify what I just said is if somebody's thinking super short, like they're going to flip the property in 6 months, that's a different consideration. But were you thinking of something that really is that short term, or?
Well, we don't know because there are so few properties on the market here, and well, where we're Chicago suburbs, and here it's kind of tight. It's still a buyer's market, I guess. No, seller's market, I'm sorry. And still bidding wars and harder to find investment properties at a certain price point. And we're kind of thinking we'll be stuck with the money, we'll not be able to look like we'll maybe need 6 months to find another property, and we'll not be able to circulate the money as we wanted to. So we want it as more flexible, to be more flexible, and the loan to be more flexible, so we are not stuck in some way.
Yeah. So, yeah, so definitely there's not the prepayment penalty. Generally, the example I was starting to give is that's a different discussion. Like if somebody's thinking, yeah, we might get rid of the property in less than a year, you know, that would be something we'd want to review. But if you know a lot of these prepayment things, it's like you got to be in them for several years to get rid of the prepayment. So, yeah. So
Thank you.
when you start talking less than a year, that starts to get into the arena of flipping the property and just a different game plan. And yeah, maybe I will get rid of it in less than 5 years, but it's not going to be super quick.
Okay, yeah, makes sense. We'll certainly look deeper into and all the variables with this kind of product. Thanks a lot.
Yeah, it's the short version is no prepayment is necessary. Depending on when you jump into the market, the rate can be comparable to a traditional loan. And if it's not the perfect timing, it'll be a little bit higher, but you're still staying in single digit rates. And it's very streamlined on the paperwork is one of the biggest attractions about it is.
Yeah, thank you. Appreciate it.
Yeah, glad to dig deeper if you want it another time or if something specific comes up.
Okay, I appreciate it. Will do. Thanks. I'm done here. Next.
Yeah.
Thanks.
Okay.
Yeah, Robert, you have a question?
Yes, I do. So I guess this question revolves around best option to get funding. So basically what's going on is I'm currently in the middle of working out a seller finance deal for a duplex that I want to convert into hopefully a quadplex, but at least a freeplex. And I was just wondering because I have some options here. I could do a construction loan, though I've never done that before and don't know what that entails. Or I can tap out equity from where I'm living right now. And I was just wondering if you had any thoughts of like what would be the best way to go about this. Because at the end, I would be hoping to pull like to possibly refinance out of the seller's note and whatever money I take out, which based on comp should be very doable.
So let me make sure I was tracking with you totally. So this is a property you're going to buy and the seller's going to finance it initially?
Yes, initially the seller's going to finance it.
And how long do you have that they'll hold that note?
Well, they'll actually hold it up for 8 years.
Okay.
So the rate isn't, I would say, awesome. I mean, it's good. It's a 5.75, which not great, but good.
5.75.
Yeah,
Yeah, well,
it's better than
that's a
the,
pretty exceptional rate for an investment property.
yeah, I know. I was getting quoted like 7 to 7.5 on like owner occupied property. So yeah.
Well, I guess it's also with any time with rates, no matter what the product, it's what comes alongside that. In other words, what are the costs to get a given rate? Like there's rates that could be quoted in once you look over the list of fees and everything, like it could represent several points, of charges, whereas lender B that's a point and a half higher is costing you $7,000 less in fees or something. So it's looking at the rate and the cost.
All right. So yeah, generally from your experience, do you have like, would taking out a construction loan be better, or would like just tapping equity from your experience?
So I guess part of it is what the numbers are involved. Like, do you have an idea of roughly how much is
Oh,
going to be needed to make
yep.
the conversion?
Yep. So if it's going to a freeplex, I'm estimating 50 to 60. If it's going to a fourplex, I'm estimating 100 to 110.
Okay.
And the end result, as of right now, the comps I'm looking at would, if it were to be a freeplex, so the purchase price here is 400,000. I'm putting 70,000 down, and if it were to be a freeplex, there's a comp under contract for 600,000, but based on various factors like bedroom count and stuff, I think a safe number to put mine at would be, after renovation, would be about 525 to 550. And for the fourplex, a safe number to put it at would be, there's another one that sold for about 70,000. So probably, again, going back to probably be like 625 to 650 would be a safe number to put that at if it became a fourplex.
Yeah, so there's lenders that have products where you could, and this is a property you're looking to kind of hold for the long term.
Oh, oh yeah, definitely.
Yeah.
Because, the value is one thing, but, converting it to a fourplex would also add like
Yeah, all those rents.
2,400 in rent. So yeah, that would be significant. And I'd want to keep that.
And what state is this in?
New Hampshire.
Okay. Um, yeah, so like one of the lenders works with things like that. So you're going to buy it for X number of dollars, and they'll look at that ARV value, after you do all the repairs and look at what is it today before that. And there's a certain ratio they'll work with in terms of here's how much it costs to get it, and then here's how much is needed to get it totally up to speed.
Mhm.
And, they'll allow and lend a certain percentage, within those boundaries. Um, so, yeah, because obviously that's a great rate for now, but it's only for 8 years. So,
Yeah.
now is it amortized as if it's a 30-year loan, or
Oh
how's
yeah,
that set
yeah.
up?
Yeah, it's amortized as if it was 30 years. So
Yeah.
so eventually I do have to refinance out of this.
Right. Yeah, it's a roll of the dice of like, how long do you want to hang on to that versus even the best experts out there, what they forecast, is at some point the rates, a lot of people do think they are going to go lower, but within 8 years, how much of that time is it going to be lower versus going higher than what it is today? So if you
Hon-
go through
honest,
it, like,
honestly, at 5.75%, I'm willing to drop that to get like all my money out. That's not, like I said, it's a good rate, but it's not like twos and threes that I have that I'll never give up.
yeah. So, yeah, so that's just one example that comes to mind immediately is the type of loan where the lender's geared towards that type of thing, an investor that's wants to put some work into the place and they'll finance the purchase of the property or the refinance and as well as the construction part that you want to cover. But then there, like I say, there's boundaries on the ratios that they're going to allow that. So that's something obviously you
Yeah.
can have you in touch with that, the finer details of that lender that does that type of thing.
And generally, which is going to have better rates, like the construction loan or a second mortgage on, let's say, a primary residence?
Well, if you're saying, I just want to get $70,000 out of my primary, um, yeah, that's going to be a better rate than an investment property rate. And people have different thoughts about that. Like, yeah, that sounds good. The rate's lower. But then others say, no, I don't want to mess around with my primary residence. I want to keep everything contained within the investment properties.
Well, this quote primary residence is a duplex I'm house hacking. That's not going to be my permanent residence forever. So
Yeah.
Now
Now that your thought in going that direction would be just to cover the repair work, right? It's not
yeah.
that it's got a value to refinance the seller's financing.
Yeah. So in
Yeah.
that case, I just pull money out of this, do the thing. I'd still refinance out of the sellers, but then I either A, have more money, or B, I can also use that money to, if I really don't like the fact of having a second on here, get rid of that second that I'm going to put on here.
Right. Um, so at this point, what you're getting ready, or you've already put in an offer for that property?
Well, we have an agreement over emails and writing.
But not committed yet. Yeah.
Well, no. The problem is, it's like I sent him a PNS, and he wants his lawyer to look at it, who is the most unresponsive lawyer I've ever seen. Like, this guy is quick to respond to me when I ask him, "Hey, how's it's going?" But this lawyer does not want to review that PNS for some reason.
Yeah. I mean, lawyer stories are all over the place. It's just not a priority case, and they kind of put certain clients on the slow track, and
Yeah, that's
that's a whole
unfortunately.
nother discussion.
Yeah, that's unfortunately what I think is happening. I don't think he's trying to snub me, because if I email him, he replies to me within a couple of hours, even if it's like 8 o'clock at night.
Yeah. So, yeah, I mean, obviously open to helping out if there's something you want to do, but yeah, like you said, there could be that approach of tapping some equity there and just take care of the repair work you want to do, and you could come back later and now the property's got a greater value and get a whole nother type of loan going on for the long term.
No, I appreciate it. Gives me some thoughts in my mind when I'm trying to plan this entire thing out.
Yeah, I would think yeah, you've got the one scenario tapping the equity in that other property. The other would be just where there's sort of this all-in-one type loan situation versus a construction loan that's not exactly that. I mean, you're not building a new property, but you're kind of upgrading the existing property.
Mm-hmm. Yep. Oh,
So yeah, if as you're sorting that out, if you reach a little more clarity on that, yeah, be glad to dig deeper into, the specs on a lender like that, where, it could be potentially an all-in-one situation.
yeah. No. Definitely, I'll be reaching out. I don't know yet because I have to, get past the
What's
zoning
happening
board
with?
first. Well,
Yeah,
well,
yeah,
first close the deal, second get past the zoning board.
yeah, yeah, yeah. And some areas zoning's not a big deal, in others it's like unnecessarily complicated and slower. It just depends on the town.
Yep.
So, would you say, as a generality, New Hampshire is a bit easier going than when you think of bigger cities
No.
where it gets complicated?
Well, first of
Yeah.
all, this
No.
is a smaller town. This is a smaller town. No, New Hampshire zoning laws are part of the worst. But thankfully, if you know Matt Hawkins, the lumberjack landlord, he's been dropping some gold nuggets in his boot camps of like how he's 3-0 on zoning variances and the exact methods he employs. So I've been getting some very great help there to make sure I win.
Yeah, that's great. That's great. Yeah. Yeah, just sometimes tapping into people who've done this a few times before saves a lot of trial and error on. Well, keep us keep us posted as it progresses.
Yep, I will. Thank you.
Sounds good. Thanks.
Anybody else have any questions or any other stuff they need to talk about tonight? We were talking earlier about this being a shorter meeting than usual just because of the holiday tomorrow. I'm glad you're all here though.
Yeah, I got a question.
All right.
Regarding the DSCR loans, the coverage ratio, I was told that 1.3 is pretty standard, pretty average. Is that correct?
I don't know that I'd put. You mean as far as just getting an approval?
Yeah, as far as the average lender, they from what I understand, they typically like about a 1.3.
I don't think that's because, yeah, you can generalize, but then there's people that do something a little different than the next guy. But so I don't know that I would say that would be the standard across the board.
Okay, so it's really something you got to stop.
Yeah, DSCR. I mean, just maybe not as extreme as some other loans. Like there's like in the mainstream of loans, like most commonly is if you walked into 20 lenders for a primary residence, they're going to say 600 something is needed on a score. And we've worked with lenders that like will do a VA loan for a 500 score. That if the rest of the things add up, but 90% of the lenders don't go there, but there's some that kind of made a niche of that.
Mhm.
So that's kind of an extreme example, but it's like, yeah, a lot of people don't realize they walk into all these lenders and they're telling them no. And I'm actually working with somebody like that now on a VA loan where like they've been to a few lenders and they're telling them no, but then these other lenders take a deeper dive on their underwriting and figure out a way to make it work. The VA themselves, they don't have a problem with it. It's just most lenders don't want to go to that arena. No, I don't think DSCR is as extreme as that, but I thought I remember one of the ones I saw was like 1.25, but again, then within a given lender, it's not just a black and white thing. In other words, they'll have one ratio and here's the rate you're going to get in the terms, and then not as ideal a ratio, and they present a different offer. So it's not just
Yeah, it's the accumulated metrics that they consider.
Yeah, there's a menu of options, like depending on what the ratio is, then now the more ideal ratio it gets a little better rate than the next guy, but they're still doing the loan.
That makes sense.
And yeah, and some lenders, there's other things on the whole checklist of underwriting. Some lenders have certain expectations that lender B is not going to have. So, they're not, well, none of them are all that concerned with your income and activity. Otherwise, they might vary on a minimum score, for example. So one has a higher score demand than another lender.
All right. And then my next question should be a pretty easy three-parter. Has anybody called asking about leveraging their Bitcoin? Have any lenders talked about lending on Bitcoin? And are there any lenders actually lending on Bitcoin?
Yeah, it's definitely a topic out there now. For the sake of right now, some kind of answer, I would say I haven't really dug into that, but I know that it's out there, and I could check into that to get a more accurate answer. It's like I haven't had anybody really approach me to do that, but I know that there's a lot of interest in that, and I believe that there are certain type of loan products where that some people are doing some things with that now, but I could, like I say, I'm not, I would, in all honesty, I'm not 100% up to speed on that, but so I think that there is something going on, and I would just have to dig into that as to what the lender is, what kind of loan product is that really that a person's able to do that. Have you run across anything yet with that gave you?
I did years ago. I think this was maybe 2 or 3 years ago. It was I don't think it was a reputable company.
Yeah, that's the thing to be sure as well.
Right. And they wanted quite a large ratio. I don't remember. I want to say it was like 1.5 as far as collateral. Something like, or maybe 1.7, something like that. It was up there.
So I could check into that. Is that something you haven't just kind of curious about, or you're thinking, yeah, that might be something if it was available in the right terms, you would want to pursue something like that?
Yeah, I'm just curious right now. I'm in a Bitcoin community, and I was just curious to see if I could add to the conversation.
No, I know somebody that's very big into that. I mean, as far as the whole Bitcoin scene, not so much from a mortgage angle, but so yeah, tomorrow being Thanksgiving, I wouldn't be able to tap into these people, but potentially it's a mixed bag on Friday. Like in the mortgage community, some of these people are working and some aren't. So worst case is Monday, I could probably get a more precise answer for you.
Yeah, whenever it's convenient. Really appreciate that.
Yeah, yeah, that sounds good. Yeah, it's good for me as well to get up to speed on that because it's advanced to a whole nother level than it was a few years ago.
Yeah, it's relevant now.
Yeah. So what area, like if let's say fast forward this, something was realistic, what area are you in? Like what state are you in?
I'm in California and I invest in Indiana.
Okay. Yeah, I can check into that. Are you pretty much on with these guys every week?
I try to be. I think I've missed the
Yeah,
last
yeah.
2 weeks.
Okay. Yeah. That everybody's schedule's different. Yeah, so
Yeah,
I mean
actually,
you
I try
had
to
my
make all three.
email. Yeah, I'll probably be back with you again and then you have my email there in the chat and I can check into that.
Yeah, perfect. Really appreciate your time here tonight.
Sounds good. Yeah. No, it's kind of getting me to think about some things a little deeper on some of these options. I mean, there's so many different ways people are accomplishing their goals, and sometimes people get discouraged. They talk to 3 or 4 lenders, and they're all saying the same thing, and never knew there's this guy in the middle of Nebraska that is a lender that is not advertised all over the place, but they do something that most people don't want to do. So, and they're legit. I mean, they're not like you kind of looking over your shoulder, but there's just different lenders have different niches. It's just like some of the biggest lenders in the country, like the whole score issue, like most of them land in a certain arena, but there's plenty of huge, lenders doing billions in sales that don't follow the majority.
Yeah, that's actually something I picked up tonight was that lenders do different things. And I would assume that's really based on their knowledge and their ability to do those certain niches.
Yeah, their risk tolerance. I mean, some are very conservative and they only want to do you know, the A type borrower that everybody wants to get their loan, and then others get involved in situations that are very difficult. I mean, some have a shorter timeline on bankruptcy or self-employment. Some it's just like, okay, the taxes say you're barely making anything, and then lender B says, I'm gonna look at your bank statements and figure out how is it you got a 780 score and you live in this big house, and so but a lot of lenders, like, yeah, they don't go there. It's got to be a pretty straight line there. So yeah, these other guys have figured it out and they're capturing loans that the other people don't want to do. And like the example I was given a few minutes ago with the veterans, like the government, the VA, they'll do these loans with not so desirable credit scores, but most lenders don't open the door for that. And the same thing with FHA loans. There's people that will do some things out of the box that's perfectly fine with the government.
I'll also say happy Thanksgiving to everyone.
Yeah, thank you, Ryan.
Yeah,
Glad you could make it.
same here. Yeah, well, I'm on the East Coast, so we'll be starting 3 hours before the rest of you.
Are you there, Sean? It's been a little while.
I am.
You were last time we heard from you, I think you were moving forward on an eviction.
I was.
Was?
Yeah. Well, the tenants have paid in full as of today. So I actually have a writ of dispossession, and the deputy that was supposed to meet me there to to move the tenants out is on Thanksgiving break. So I guess I'll be calling him back when he gets back to figure out what I'm going to do. So they still haven't taken care of their dog problem. So, but they did pay.
And the dogs, you mean, because the dogs, they were on the lease, right? Their old lease?
And yeah, well, their old lease says no dogs,
Oh, that's right.
and the old lease says they have to have insurance, and they have dogs and no insurance, or they have one dog that I'm a little worried about and no insurance. So I got to figure that part out. I kind of don't mind if they have the dog, is if they would get insurance, right?
Mm-hmm. And is that regular renter's insurance or a specific insurance policy for the dog?
Yeah, well, renter's insurance that would insure that would name me as an additional insured, so that if the dog bit somebody, they wouldn't have a claim on my insurance, or they would have to go through the other insurance first.
Okay.
I think the last time that discussion came up, the meeting went to the dogs. So
Yeah, it did. Totally. Speaking of going to the dogs, that firefighter jumped in.
What's up, fellas?
It's always so good
Mark,
to see
Mark,
you.
you actually have to be on your best behavior because we actually have a guest today.
Oh yeah.
Yes, we have a guest today.
I'll leave then. Let me know when the guest leaves.
No, we're glad you made it. We had a friend up here, Mark Simon. He's a lender with Nexa. I think you probably heard of him because Mikey is a customer of his, and I've been getting help from him as well.
Oh yeah, Mikey speaks highly of him.
Yeah, he's great. Chester, you had an LVP question?
Yeah, I just wanted to kind of, pick yours and Ryan's brains about looking at. Now, it wouldn't necessarily be like let's say for the entirety of a property, but like if I'm looking at a few duplexes, a couple of them have carpet, but it's like the high traffic areas is the best way I can put it. Is there like a, for lack of a better phrase, like a quote unquote generic rule of thumb, or would it be more on a case by case basis to say, like, let's say if there's a property that's 2,000 square feet and roughly 40% of it, so let's say, about 800 square feet is carpet in a high traffic area. Is there like either like a, I don't want to say rule of thumb, but like sort of like a rough ballpark estimate number that you could either give, or do you think would be like appropriate, or would that be something that would be like kind of market dependent because of labor? So either Frank or Ryan.
Oh yeah, Ryan, you got any thoughts?
As far as installation, oh man, what do I do? I always have to consider baseboard. So am I ripping baseboard off? Am I painting new baseboard and putting it back on? That's always a consideration. But I think as far as what I charge for flooring, it's $250 a square foot, something like that, $275.
Okay.
Yeah, I think that's reasonable. There are a few considerations. For example, how cut up the floor is. Like if it's say you're doing one big living room, I would be right there with Ryan, $250 a foot. But if you're doing, say, a kitchen, bathroom, and hallway where you have to go into all those 3 different rooms, it's a bit more time consuming. And if you're tearing out carpet, there's going to be a gap under the baseboard, like he said. So do you take out the baseboard and lower it? Or because then you're going to have unpainted wall when you drop that baseboard, or do you put in quarter round, leave the baseboard and add quarter round? Sometimes that's not the best look. Honestly, it may be market dependent, because if you ask Home Depot, they install it basically for $2 a foot, but I have never seen an installation that I would accept from Home Depot.
I would definitely second that.
To put it nicely. You know, I mean, you got to maybe familiarize yourself a little bit with the process, but you know, undercutting door jambs, you know, so the material
Absolutely.
slides under there instead of putting quarter round around a door jamb to hide the gap. You do need to leave a 1/4 inch expansion gap all the way around, so you need to cover that with something. But we just did one in a mobile home, and we ripped out the carpet, the pad, the tack strip, and thankfully it didn't have baseboards because it had carpet, so we added baseboards. A lot of the manufacturers don't recommend. I've heard they don't like you to have like more than 400 square feet. If you do go more than 400 square feet, say it's a bedroom that goes down a hallway into a living room, they would prefer that you cut it off at a door and have a transition molding, even though it's the same flooring going through the whole house. And we've installed LVP in whole houses and have never had an issue. Even though it's not really wood or anything that's going to expand or contract, they still want you to give it a little bit of time to acclimate to wherever you're installing it. They like the heat to be on, for example, and the different brands. I happen to like LifeProof from Home Depot, but if you've been following the garage rebuild that we're doing at our house, we needed to save some money, so we picked an off brand, and it was half the thickness of the LifeProof. It's going to work for our needs, but if it was a rental, I would go with something thicker like the LifeProof. A lot of times you have to be careful with the subfloor, because when you take out carpet, if the subfloor, if it's plywood that's fairly smooth, that's nice. In older homes, you'll have individual planks, like 1x6 or 1x8 planks, and they're fairly uneven. Sometimes the flooring will follow the waves. Sometimes you have tongue and groove, 2x6s that are fairly consistent, but they still do have sometimes a little bit of buckling. So there's that. If you're going over concrete, you'll want a vapor barrier. And LifeProof sells an underlayment vapor barrier. It's kind of expensive. It's $1 a square foot. So the LifeProof material itself is close to $4 a foot. So it's $5 with the underlayment. And then if you add Frank's $4 a foot, that's $9 a foot. So it is quite a bit more expensive than carpet. If you price carpet by the yard and you're getting carpet for, I think a decent carpet and pad is about $25 a yard. There's 9 feet. But if you're paying $8 a foot, then that's what, $72 a yard. So yeah, there's that to think about. And in our triplex in Missouri, we did do it in the high traffic areas. Like you said, we did it in the hallway, the kitchen, and the bathroom. And then we left carpet in the bedrooms.
Okay. Yeah, because that was one of those things that I was thinking about, is like a couple of the properties that I've been looking at. These are, I guess the easiest way to call it is just basically wall-to-wall carpet. Like, there's like very, very small areas where there's not, but like those are like close to like doors and things like that. So you may as well call it wall-to-wall carpet.
Mm-hmm.
And so I was trying to see what would be more reasonable in terms of doing a full I guess more practical is probably a better way to put it. Would it be more practical to uh, tear out the carpet in only the high traffic areas versus, uh, covering every square inch of the well, at least of the um, first and second floors, like the basement that's got the I don't even know what the name of it is. Basically, like the uh,
Epoxy floor.
yes, the epoxy floor. Thank you, Ryan. It's the sort of almost kind of like a dilemma, if you will, of like just go ahead and just take care of the whole thing versus, you know, it will require, eventually doing some deep cleaning if there's, carpets in the bedroom and, just kind of over time, it'll require, deep cleanings every so often. So just kind of wanted to kind of weigh, would it make more sense to just take care of everything all at once versus, having to continuously deal with, ongoing maintenance from having to take care of the carpet every so often.
Yeah. Thank you, Mark, for joining us tonight, and we'll look forward to having you again if you're up for it.
Yeah, I appreciate it. No, I'm learning by just listening in on this part of it here. Yeah. So, yeah, I'll just look forward to joining you again and to follow through on a couple of these questions that needed some follow up. So, yeah, look forward to that, and just wish everybody a great Thanksgiving, and we'll talk with you all soon.
Okay, thank you. Have a great holiday.
Thanks,
Yeah,
Mark.
happy
too.
Thanksgiving.
Same to everybody.
Yeah, so Chester, on the carpet thing, what we've done in the recent past is just if the carpets are in good shape, we'll just clean them and leave them for now. But this year's been pretty tough. We've been spending a ton of money on our units, so try to save a little bit where we can. But one thing that I pushed for when they were doing the carpets was to have them dry cleaned versus steam cleaned, because dry cleaning, it's a really effective process, and you can walk on the carpets the same day because they don't soak them and then try to suck all the water out. The other thing that happens is if they have pets or anything, and once they wet them, it just stinks like crazy. So we learned the hard way here in California when we were doing the bank-owned properties, and we had a couple steam cleaned, and that was a mess. So we found a dry cleaner, and they just use dry chemicals and vacuum them right out, and they're able to get some pretty decent stains out too. So you might want to look at that in your market. The guys in St. Joseph, Missouri, didn't even know it was a thing until I brought it up.
Okay.
But yeah, if you consider just say the house was 1,000 square feet, if you're going to put LVP, that's $6,000 to $8,000, not including the demo of tearing out whatever's there. And if it's not all exactly one level, then you are going to have some transition moldings from a higher to a lower floor, things like that.
Okay, so that could potentially be roughly. Well, yeah, I guess I'd have to look at a couple of different quotes, but like I was kind of estimating in that, right around, let's call it like for even number, somewhere between 10 and 12 grand, like, just completely all in everything, materials, labor, ripping up the carpet, laying everything down, like just whole 9 yards, so to speak. That was the rough estimate that I was or sort of had in mind. So, and again, it sounds like it really is more so dependent on the square footage of the property. So, like I said, this one was 2,000 square feet. So it's like, between $5 and $6 sort of all in. But then, like you said, there's a couple other things to also consider in terms of like baseboards and things like that. So, okay.
Yeah. Anytime you have a question, just call me or text me. I'm happy to help. I'm sure Ryan probably is. Well, I don't want to speak for Ryan, but I'm sure he's happy to help too.
Yeah, anytime. Hey, what are the conditions of those carpets? Are they like brand new? Are they questionable?
They're worn, not like, so worn that they have like, the dark brown dinge look to them or anything like that. But they definitely look like they've seen better days.
Yeah, maybe get one of those dry cleaners out and see what they say, or a few of them, see what they say.
Maybe they can save them for one more tenant. That's what we were thinking. It'll work for one more tenant, and the tenants that were coming through looking at the place didn't even raise the issue. But the other thing too is LVP is not bulletproof either. I mean, it can be damaged. It can melt if you drop something hot on it, or it will scratch if furniture doesn't have pads under the feet and things like that. The one, I guess, nice thing is that, if you have transition molding, say from the bedrooms to the hallway, then something happened in the bedroom, you could just replace the bedroom floor, not have to go through the whole house. I guess that's one way to look at it. And most of them now, you can unlock and repair a damaged plank and then reinstall it once or twice. But I don't know too many, I don't know too many people that have done that, because you need to save a box of the material, for example. Where do you save that? And will your contractor be the same one? Would they be willing to do that? You still need to pull up the baseboards or whatever to start unassembling the floor from one point or from one wall or the other. So there's that, pulling up baseboards, putting the baseboards back in, touching up caulking and paint, things like that.
Yeah, and actually saving planks can be a pain in the ass. If they lose that bead, then it's game over.
Yeah, and the colors and stuff, they change fairly regularly. Especially when you're working with laminate flooring, it's a little bit different. They change the colors and patterns so often that if you don't save a box, it's pretty hard to find more when you need it.
Okay. Yeah. So just giving me a few different things to think about. But yeah, definitely do appreciate that, guys, because I had not, and yeah, Ryan, I had not thought about, seeing whether or not, the carpet can get, I guess, quote unquote, one more use out of, the next tenant, and kind of seeing, is it salvageable basically, for at least a little while. So a couple different options to think about.
This is in the place you have?
No, this was a property that I was looking at. I was like, about to make an offer on it, but I was just like looking at a couple different things, and I was like, oh well, perfect time to, other than tonight to have the accountability call. I was figured, at least ask to see like, so, but definitely some good things to think about. So definitely do appreciate looking at it from both perspectives. So definitely appreciate it, guys.
Yeah. I guess the other thing, so is this like an up down duplex or something? Because you mentioned up first floor, second floor, but one thing that we've run across over the years is like in apartments and stuff, they won't let us install laminate or hardwood or anything in the upper floor because of the noise. Like if, say the women like to wear high heels or something, it's going to be, clicking all around upstairs. And they even got so bad as to the whole place had to be carpet, even the kitchen, which was kind of gross, but
Wow.
that's just something that, you made me think of with the noise.
Okay, yeah, that's something I did not think about in terms of.
Chester,
and
did you share the news with everyone that you told me about a while ago?
Oh, I did not. I guess we had just kind of gotten into a few other different conversations.
This is big.
So yeah, it is. It is definitely, yeah. So I was telling Sean, as we were kind of catching up, and I was telling him, he was just kind of like, "Hey, how's everything going?" I was like, "Yeah." So the tenant literally today, maybe a few hours, or not a few hours, maybe I don't know, 5-6 hours ago now, signed the lease, and it goes through May of 26.
Woohoo!
Nice, congratulations.
Definitely, thank you. Very much quite a journey. No pun intended with the YouTube screen name, but definitely quite a journey to get here. So that's why I was just kind of like, definitely wanting to be able to celebrate the wins.
Yeah, enough of the journey. It's time for some wealth.
Yeah. Yeah, once we finally start getting the rent checks in, like Dion said, it's the worries or the fears or whatever never go away. They just change every so often depending on where you're at. So now it's time for the will they pay the rent on time type of deal. So
yeah, I was thinking that about your situation. Wouldn't you want to start having cashed a few months of rent checks before you're putting an offer in on a duplex somewhere?
Well, yeah, I mean, I figure, especially with the length of the process, it's something that, at least putting in offers, like if something does get accepted, the quality, if you will, of some of these places, it definitely could provide an out, so to speak, if I wanted to be able to say, yeah, I think I'll go ahead and pass on this. But I think it's more just simply to be able to be in that mindset of, again, still looking at buy box, still looking at, properties that make sense, do they cash flow? For lack of a better phrase, using Zuber's term here, but making the disrespectful offers, being in that sort of mode or that mindset of the build phase or the growth phase, because not not being in an going to one extreme of like, hey guys, I made 17 offers this week, I'm kind of slacking here, versus going months without even having looked at anything in the market, so it's kind of a little bit of an in between, still kind of looking up to Mark in terms of how many properties was it that you got, Mark?
Mark has 14.
Goodness gracious. Mark, you got all 14 properties at the same time?
He must be pretending like he's working.
Yeah.
Yeah, I'm like, yeah, he probably is out on a call or something. But
yeah, I don't know how long. Mikey, do you know how long it took him to get the 14?
Was it like 2 years? 2 years?
I think that's
what?
right.
Oh, something like that.
Go from 0 to 14 in 2 years?
Yeah, I don't know.
Must be nice to be rich.
I don't know how he did that.
Yeah, I'm like, what in the world?
Well, isn't Pittsburgh like a relatively inexpensive market too?
Yeah, it's like compared to Detroit,
Like
Pittsburgh is cheaper than Detroit.
I could have potentially bought 14 properties if I invested in Pittsburgh in like the span of 2 years.
Yeah, my goodness.
You know, like what? Like what? Like if you're in a market where you can buy like what a $60,000 single family home and put like only 25% down, yeah, you can grow really fast.
Mhm.
Yeah, that was what. Go
Are
ahead,
they all in
Mitesh.
Pittsburgh?
Yes.
Okay, so he's got like at least he's got scale there.
Hmm.
Yeah, and Mikey, how many properties do you have in Pittsburgh?
3.
So a much more respectable number. Curious
Hey
how
man,
long.
I'm taking baby steps on this one.
Yeah, so it's basically the sensible route. So, and whenever Mark does get back, I do want to ask him about like, the repairs and maintenance and whatnot, and like if he's had any major things happen as far as like, like multiple hot water heaters or like, furnaces or anything like that, if those have all gone at the same time, like what he did with that. But did it take what, like I'd say like a year for each property or somewhere around there about smart Mikey?
Around I think 8 to 9 months when I was tracking it.
Okay.
I would say my biggest issues were like the drains clogging. I seem to have that issue everywhere.
Hmm. And is there something like in terms of like thinking about like sink versus shower versus toilet, is it
All
any
of them,
one
all of them.
particular?
I would just at this point, if I was getting another property, I would just snake all of them.
Okay.
And then also like in Detroit, if you have a basement, it'll the sewer water will come through in reverse. So that also happens.
Interesting. Okay. You're talking about like where there's like the drain in the middle of the floor and it'll just like back up through that drain.
Yeah.
That's definitely a pleasant thought.
I wonder if you can get a check valve for something like that.
You could put like a one-way valve in there.
Yeah, that's what I was just thinking, a check valve.
Yeah, that would make sense. Yeah. Would that have been something that like maybe not necessarily during inspection, but like I'm just trying to think like if I was to like try to put together a scope of work in terms of like, hey, whether it be handyman or plumber or whomever, just kind of like, hey, I want to get a check valve put in so that sewage doesn't, fill up the basement. Like, what would be like some things like to kind of think about or think through for that? It would just be like, at a certain point, close to the drain itself, or would it be like, would you want it like much further back where it would like maybe be like, hey, digging up the yard, or
you want to dig up outside the yard versus busting up your basement
near the road? It'd be digging up right there, away from your house. So you have to dig it up and put it in there. You might be able to put it right at the end too in your house, but that'd be a lot cheaper. So those are the two options, but usually it's in the street.
Okay. So like right close to the curb, I'd say. Basically like right where the curb and the front of the property is, I guess, or like what am I
Yeah.
trying to say? Like where the lawn is, like right before it gets to either like the sidewalk or the curb, sounds like.
Yeah, that's what I've been told, but I don't know the exact details.
I
I'm
would
willing
think
to
you'd
bet the
want
city will let you know because you're going to need a permit to do that.
to.
Yeah, no, you definitely would have to, work with
But I've also put one in the basement right where it ends too. I put it in there too. So
so like
I
is
would.
that multiple then it sounds like kind of like one is
no,
like the
just
main one and then a
just
fail
one.
safe?
You just need it to block somewhere, it doesn't have to be on the street.
I would say
Okay.
get as close to the city hookup as possible because that will allow you the most volume in the case that the city is backed up. At least your tenants can still use something and have volume to store their, waste.
It's a
Right.
lot more expensive if you go down through the street. So it's all an
Right,
expensive.
yeah,
Right.
through the street, but
It's like
just as close as possible,
I mean,
furthest
it's
away
like
from the
two
house.
grand. It's like $2,000 to put it in.
Okay. Which I mean, comparatively speaking, like if it like, you know, I'll just politely use the phrase raw sewage, seeps up into the house, that could be significantly more than $2,000. So, well, and actually, now that I think about it, has like, hopefully no one has, but like, in the event anybody has run into something like that, like, would the like the, what do you call it? Why am I drawing a blank on the name of it?
Would the city take care of it?
Yeah, basically, would the city take care of it? Yeah.
I have heard of one story. I don't really remember any context to it, but yeah, somebody had a basement that flooded like 3 or 4 feet with just,
Jesus.
with what I want to say, a curse word.
Oh.
And from what I understand, they had to have a handyman come out and pump it. Well, maybe not a handyman, but somebody like a porta potty company come and evacuate it all.
I am pretty sure anything that happens with the sewer anything that happens with sewer lines that are on your property and off the street is your problem.
Yeah, I've had to clean up the mess.
Wow.
At that point, you just burn the house down. That's
Yeah,
gross.
basically.
Jesus.
Oh my gosh, that's ridiculous.
Yeah. If it's a dirt basement, it kind of. If that happened in one of my dirt basements, I don't think there'd be I could probably recover from that.
So,
oof.
Chester, this is happening on the property where you displaced the tenant?
No. So like this was just a thought I was kind of like thinking about in terms of like when Mitesh was talking about the different types of drains in terms of like backing up, and I was just kind of thinking further down the line. The one thing that I was thinking about, because it's at least seems to be the most common thing that when I hear about drain problems is the flushable wipes, quote unquote flushable wipes, especially when Matt was talking about it last week. That was really kind of immediately popped in my head. It was like, is this something where if something happens with the so-called flushable wipe and then it just clogs or backs up the drain? And that was one of the reasons why I was thinking like, or was it Dion? I think it might have been Dion who had talked about it like a couple days ago on, no, yesterday. That's right, yesterday, because he had his call yesterday. Um, what I was thinking about was like, would it make more sense to be like, hey, if X, Y, and Z happens and the culprit or the cause is a flushable wipe, and of course it's in the lease, there's like, hey, only like paper top or not paper top, toilet paper, excuse me, can go down the toilet, and if it backs up and something happens and we've got to get it, like emergency snaked or whatever the case may be, and they find out, hey, it's because there's a bunch of flushable wipes, then it would be like, okay, cool. I would be the one to have the work get done, but then bill the tenant essentially for the work, right?
Well, no, you'd have to prove it was them. So, in order to do that, what you'd want to do is have like documented, like, all right, run a camera down your sewer line and have documentation that there are no flushable wipes in the entirety of your sewer line. And then when that happens, now you have proof that that before and after it was obviously them. Because the problem with that is, what if it was there before your tenants did that?
Well, now that is a good point, and I do have a video that sewer scope, basically. I had a sewer scope done before closing on the property, so I know there's nothing in any of the sewer lines. So
Then
I
you're
can
good.
definitely, yeah, okay, cool.
Yeah, Chester, I stole a clause out of the lease from the property management company on that the unit that I just bought, that basically said anything coming from the city to the house is landlord's responsibility. Anything coming out of the house, drainage, is tenant's responsibilities. In general, that's what it says.
So
Oh,
when
I thought
nice.
I'm gonna add that to everything.
when you have a duplex, how do we
That's a good question, Anna.
I mean, I had a problem before, and yeah, I guess like yesterday, Dion was saying that send a handyman to bathroom, and if there's any kind of pressure wipes present in the bathroom, you're gonna give them a warning and things like that. And I do have a clause in the lease, but it's very difficult to enforce. I mean, all I'm gonna see is just a flushable wipe hanging in there at the very exterior, the septic tank. What do you call it? The opening when you open up the lid. And how do I say, okay, is this unit A or unit B? So like, I'm curious how everybody's doing.
Well, my thought on it is actually collecting on it. If you had a blockage, it might be difficult, but having it in the lease and pointing it out to the tenant that they're going to have to pay for it if they cause the blockage is enough to maybe get them to change behavior, which is something.
Yeah, I mean, you have duplex, and it's kind of hard to. I mean, I'll let both of them know.
Yeah. Proving it and then actually collecting on it may actually wind up being really difficult.
Yeah.
But if they think you can, then it's better than nothing.
Yeah. It's tricky.
Okay, yeah, that was one of the things that just kind of sort of quote unquote popped into my head when Mitesh was talking about it. So that was just one of those just wanted to kind of see how how everybody else is kind of dealing with that. But yeah, that definitely sounds like that's a and we're just more curious, Sean, you said which lease you said, was it like a template lease where you saw that one clause?
It was a lease that I inherited with my latest purchase. The tenants were under the lease from a property management company. I actually stole a lot of their clauses. It was pretty good, and they had one in there about that. And of course, everyone knows the thing about, not all leases are legal in all
Right.
states and
Yeah.
everything, but yeah, this one was used by a property management company in my state. So yeah, I definitely stole it for future use.
Okay. Would you like, if I was to email you, or just to at least to see what it says or see the verbiage in it, would you mind sending that over? Because that's something that at least it sounds like it would be. And I mean, of course, still have my own homework to check over the lease that the tenant signed today, but more curious than anything to really kind of look that one over, in case you don't mind.
No, I don't mind at all.
Okay, I'll definitely appreciate it.
Yeah, the other thing is the guys that snake the drains, they might wreck them too. So gotta be careful who you hire. My
You said
friend
they could destroy the drain?
well, yeah, my friend, he hired somebody and then they had to replace the whole drain. They had to go through the concrete and replace the drain.
Wait, how did they manage to ruin the drain though? That I guess I'm trying to wrap my head around.
Was it that? What kind of drain is that? Matt said it before. It's that stupid drain made out of paper, and they might have been using some like, what was it? There's a way to clean out drains using basically an extremely overpowered pressure washer that like cuts that can like cut debris. I see it being possible, but I'd like details of exactly what happened.
Yeah,
Yeah, I've heard of that before too. A high pressure washer just blowing out pipes.
yeah, it wouldn't take much to damage. I mean, even old clay pipes, right? Because sometimes they'll send like a 2-inch cutter head down there to cut roots and stuff. And if it hits a blockage and takes a sharp left or something, it could easily bust the wall of the pipe.
I'm guessing these must have been very old and brittle pipes, which, all right.
Yeah, I would assume.
I highly doubt this was brand new PVC that they broke.
No, these are all pipes, but it's just as a snake is a little harsh. So once it starts striking the side of the pipe, it might crack it or break it.
Well, sure, it old pipes. It's like the same thing with like pouring down like heavy abrasive drain cleaners on old cast iron. It's like you're going to wear it, there's probably going to be collateral damage if you do that versus, new PVC.
That's true. And then more really sort of ballparking, like if something like that was to take place, like as far as like repair or replacement, what type of I guess, of course, it would depend on the diameter of the pipe and then the length. But let's say it's a few feet of pipe and it's like away from like some of the major like main pipes. How much do you think like an estimate of something like that could be?
Uh, I would say depends on where the pipe broke. I mean, if you have a basement and you're only digging up dirt in your own basement, probably less, meaning like a couple thousand versus excavating, you know, to the point where they have to like rip off part of a sidewalk or part of a road to like get at the part of the pipe that burst. Because now you're talking repaving the road, or if they have to rip up a driveway to get at it, maybe now and that repave the driveway, maybe now 10 grand. That's the ranges I've heard Matt use.
Okay. Yeah. As soon as you started going into that five figure, that was the first thing I was thinking was like you know, digging up the road or the sidewalk type of numbers. So yeah, that can definitely get up there. And I guess, and along those lines, one of the other things too, how does, whatever municipality, like how do they know where their responsibility starts and stops and where the homeowner's responsibility starts? Like, is there like a portion that like the drain, like when it connects to like a certain, I would guess like a sewer main, meaning like it's the homeowner's responsibility until it gets to the sewer main for like that's like under the street or
That's my understanding of it. So
okay.
whatever's branching off into your house is what you're responsible for.
Okay.
Yeah, sometimes they'll specify if it's at the edge of the road or edge of the sidewalk or something like that. Between the edge of the sidewalk and your house is all you. I don't think they typically want a homeowner, cutting through the sidewalk and the street. You'd have to check the whatever jurisdiction in your area.
Sure.
When I'm looking at the houses, I'm always because I ended up selling one of the properties that was in an old neighborhood where the city name was a block away from where the house was. And so now I always try to locate where the city name is because that's where the responsibility starts. Especially, try not to try to avoid the property that has a long distance to the city name if it is connected to the city. So that's something that, the shorter the better.
Where was your carpet at, Chester?
Oh, so the question for in terms of the carpet, this was in a property that I was looking at. It's not one that I've made an offer on yet, but
Oh, okay. Well, I would say like December is the best time to look and purchase. It's going to be at the lowest price, because
yeah.
there's not much competition.
Yeah, it's basically been crickets for like there have been a few properties that have gone over asking, but now it's starting to get back to like I'm starting to see the days on market starting to creep back up across, properties that uh what's the best way to put it? Basically weren't quote unquote turnkey or weren't like, 100%, finished and refurbished or whatever, but um yeah, outside of like the best looking properties, everything else is just kind of sitting. So yeah, that's definitely something
Okay.
I'll factor into that offer.
Cool. I think we're going to call it a little bit early tonight. Does anybody have any last minute questions?
Yeah, I was trying to see if Mark was on, but he probably still away, I'm guessing.
Yeah, it looks like he might be busy.
So I'll have to heckle him some other time.
Yeah, we were going to leave him in the video this week, and now he's not even here.
The one time.
At least his
He
picture's
should go. Mark should go home soon because one time I was in Hawaii. I was in Maui for a family vacation on Thanksgiving Day. Oh my gosh, everything shut down. We
Oh,
had to go to the 7-Eleven kind of store to get a ramen noodles.
Wow.
Max should just go home right now. It'll be pitch dark.
Well, I was curious. Hi guys. I was curious what everyone maybe have in mind to buy this Black Friday on whether it's material or other deals that you guys are maybe looking for or have in mind. Um, like the Home Depot have their appliances deal. That might be something to look at, and there are other deals, but yeah, just checking what everyone have in mind for this Black Friday or Cyber Monday to buy for their properties.
Well, Home Depot's Black Friday over here starts on the 29th. How they have all their stuff out in the aisles already. It's still all covered up for when they unveil it. Like the 29th is what, Friday? Yeah, so they're going to be opening that stuff up. I'm not looking at buying anything real estate wise. I was looking at some different kinds of cameras and other equipment to help make the YouTube thing a little bit easier. There's some head mounted cameras that I was looking at, waiting to see if those prices drop a little bit.
Yeah, right. Yeah, there's things like that, and I think Home Depot, yeah, like the 29th, that's their day. However, if you buy appliances at Home Depot, if you buy 4 of them, they will give you, I think it's 40% off. If you buy 4, they give another $1,000 off. And they have so many appliances currently at the store online, I guess, and it's free shipping. So I was considering that. But yeah, there's probably gonna be some deals here and there, and on cameras, and also maybe security cameras, and like the YouTube cameras. Yeah, I think. Yeah, so yeah, it will show always here, and I think Mighty has some research lights on sale. So yeah, that's great.
Yeah,
I think I've used these.
what Mikey put in there is my affiliate link for Amazon. So if you guys don't mind, if you're going to be shopping on Amazon, if you can go through that link, and if you make your purchases, then it helps us a little bit, gives us a few cents to help, like Mikey was saying last week, pay for the annual subscription for Zoom so we can hold these meetings. That would be nice.
So Sam, if you're interested in the appliances at Home Depot, yes, I was almost about to do that, but Matt gave me the idea to try to price match at a local appliance store, which did kind of work out. So I ended up spending about, well, without rebates, like $3,500 in appliances, which was $100 more than Home Depot, but I got a 3-year warranty on all of those, so for free. So something to also consider if you're very interested in Home Depot's appliances, because yeah, they do have some really good deals right now.
Yeah, and I did hear Matt talking about the price match at the local appliance store. So I was gonna also talk to some store near me and see what they can do. Call them today, but I probably will call again and just see if they have the same appliances. So they were able to match, or they were giving you the better deal, like similar deal to Home Depot.
Yeah, so their rebate structure was a little different than Home Depot's. It was they were offering slightly less per appliance, but they were so basically they had the same Black Friday deals going on. So then Home Depot's deal is for a kitchen set, you can get up to $1,000 off, but you have to buy one of each kitchen set appliance. So you have to, it has to be a dishwasher, a fridge, a microwave, and an oven/range, and you can't buy more than one. You have to go with the entire set. So they had more of a flat rate of $200 per appliance, up to 600, no, up to 6 appliances for 1,200, because what they were doing was they were also including a washer and dryer in the same thing. So what happened there was because I got a what was it? So basically they had all the same prices, but the reason why it was $100 is because I added one of those GE Profile, like 2-in-1, the 2-in-1 washer dryer combo, which also there I basically got a $300 rebate, and I convinced them to give me a $300 rebate instead of a $200 rebate, because had I bought a separate washer and dryer, they would have given me a $400 rebate. So I saved money there. So that gave me a $1,100 rebate. Now Home Depot has an instant $200 rebate on that same machine. So had I bought them from Home Depot, I would have gotten $1,200 rebate. I bought them through a local appliance store, so I only got $1,100 in rebates. Hence the difference in the $100. So then I asked, so because of that, they wouldn't give me the $400 rebate on the one thing, and I tried to get it because of Home Depot. So then the next strategy was ask them, well, what about warranty? And then because I was buying so many appliances, had a chat, and then he was able to call the sales rep was able to talk to his manager, and the manager decided to give me on all those appliances a free year warranty on all of them. So that's how that turned out.
That's awesome. So the first year warranty, anything happens, they will come and fix them for free. So
It's free year extended warranty on
free
all of
year
them.
extended warranty.
Yeah, free year extended warranty, which for all of those appliances would have been like $500.
And when you say extended, that means it's like does that mean it's after the first year or?
Yeah. So I believe that means 4 years because of so
4 years. Oh,
yeah, whatever the manufacturer's warranty is, so I decided to go with all GE appliances, and I believe that means 4 years, which normally they charge 500. They'd be charging $500 for that. So
that is such a great deal because then you buy them and you forget them.
well, yeah, it's like. Go ahead.
Where are you getting the 4-year warranty from?
No, I don't know that's 4 years. It's the manufacturer's warranty plus 3 years from the 3 year extended warranty from the store.
That's a good deal. I mean,
Yeah.
Warranties are great when it's a rental.
Yeah, I mean, like basically just talk to the sales rep and the manager and his boss. It's a local appliance store, but they have like 5 different locations. They have a sales team that I went up. I basically told them all. I guess told them all the right things. I'm a landlord with 6 units, and I'm buying another one right now, hoping to get to 10. If I do get 10, it's 2 brand new units that I'm going to need a whole kitchen set of appliance worth. And basically said, I hope, it's like I'd rather try here. I'd rather shop local here than at the Home Depot. And then it like, hey, I'd love to come back and buy from you guys again when I have, 2 brand new units coming on that need a full appliance set. So,
So how much more is it to get like the 4-year warranty on these things?
It would have been $500
per year per appliance?
No, total.
On how many?
So like 5. Well, it varied, but 5.
$100 each. That's a good deal.
Average. I mean, like obviously the microwave warranty was less than the combo washer warranty because that combo washer, well, normally is like $3,000. The microwave I bought was normally like 600. So depends.
Yeah, I wonder if Home Depot or these stores offer similar warranties for 3 years for
Yes,
that
they
price.
do. You got to pay for them, but they do offer them.
I do like Costco because they do the free installation in Holloway, and the appliances come with a 2-year warranty, and another $90 for the 3rd year for appliances under 1,000. So I do like Costco for that. They just their install dates are kind of like wacky though. You could be like waiting a month for something to be installed from them.
So I guess learning this from you guys. I think because I'm considering buying a set. So and probably just this will help with the kind of working with the salesperson or whether it's a Home Depot or the other stores and trying to get some warranty. while you buy, more than one appliance at a time. So yeah, well, thanks for sharing. Thanks,
Best
Travis.
Buy years ago, they kind of like watered down their policies, but used to be like you paid like a yearly fee and you could just pop in as many devices or things onto the plan and you'd be covered. So Best Buy used to have a really good deal on the repairs and warranty.
Yeah, it's worth it. It's worth it, especially for us landlords. So yeah, on these deals. So yeah, thanks for sharing. Yeah.
It's like something to do with Geek Squad, but you just buy a yearly membership and then it would cover anything you bought from Best Buy.
Yeah, I need to share that place too. Yeah, it's been a while, but they might have good deals now. So
Yeah, everybody does. It's just a matter of, what it includes. Does it include installation, haul-away? What type of warranty is it? Costco, usually when you buy something from Costco, they usually give a 2-year warranty included on most of their items.
yeah, and you talked about installation. That's another thing. So yeah, we can check on all that in that package and
Yeah,
made
the
the
only
best
thing I was not happy about
deal.
was one of the houses I did buy a lot of appliances for, but I was selling the house. I needed the appliances there, and it took like it was around this time too, and it took like a month for them to come in and install it. It was like a 2-week delay on the. They were short on the item, so it took about two weeks to get it, and then like another 1 or 2 weeks for the local company to come install it. So it was like over a month, maybe a month and a half I waited to get it installed. And it was just a hassle. The local company wasn't that responsive. So yeah, that was the only downside with it.
And when you look at Home Depot, they have different packages, and some of them are like back ordered or they won't arrive until January. So I'm definitely staying away from those. But I'll probably buy what they have in store that they can be shipped in a week or so, and that way, I don't have to wait for a month or two just to get them, and then have to deal with waiting for that. So yeah, that availability is important, and the warranty, and they offer installation. Yeah, I don't think for the most of stuff I'm buying for kitchen, I think the installation part is not a big deal. I think it's always a fridge, microwave, stove. Yeah, once you have the electric for the stove, I think an electrician can do it easily once he has the right wires, the right outlets for it. And then the dishwasher, dishwasher may be a little one that needs some installation, but I think it's not complicated. So the warranty is a big one. So good brands and the warranty.
For the fridge, they had to take the doors off for it to go through the doorway. So yeah, they had to. The installation guys had to do that. Take the doors off the screws and then put them back on.
Oh yeah, that's not bad. Yeah, thank you guys.
Yeah, thank you all. I hope you all have a nice Thanksgiving. We'll of course we'll be back next week, but we'll probably see you all out there. Let's see, tomorrow's Matt's live, and then
He's not doing a live tomorrow.
Oh, he's not. Oh, I guess not.
It's Thanksgiving. He You made that clear during boot camp last Saturday.
Okay, yeah, thanks for the reminder. I was just wishing you all a happy Thanksgiving. I didn't even think about that. And yeah, Mark's Bears play tomorrow. He's hoping everybody will root for the Bears.
Who do
need
they
to-
play? Is it the Lions? Because I know we have to go to Houston to play. No, wait, that's Christmas. I forget who's playing the middle game tomorrow.
Yeah, they do play the Lions, I believe.
Where's the game? Is it in Detroit or is it in or is that Soldier Field? Cowboys Giants is the middle game. Okay. Do you know, Mark, is it Dolphins Packers? Ooh. I don't know how either of them are doing. I literally don't. Oh man, and it's in Detroit.
The Packers are doing
I don't know,
good.
Mark. I don't know, Mark. I'm gonna be honest. I guess we'll have to see how the game plays out, right? Well, actually, speaking of which, what I did want to ask you about that, Mark. You probably weren't around, but you ended up getting, what is it, 14 properties or something like that in 2 years?
Yeah, I mean, I don't know, maybe like, well, I don't know, like 10 properties in like a couple months, 4 months, 4 or 5 months.
What? What? So, okay, let's start with the mechanics here. How, like, I know you said you had like emptied your
Well, my OnlyFans account does really well, but
okay.
no, I did a 1031 exchange too. Yeah, I had a condo out in Hawaii, and then I used lines of credit and stuff too. So
So, and I guess in terms of like a average cost per property, you're looking at something like what, like 90, 100,000, 150, something like that.
yeah, probably around 150 or so.
Okay. So what I wanted to ask a little bit earlier was about um like I guess like combined maintenance repairs, like unexpected expenses, stuff like that. Like how did you or have you dealt with, multiple like hot water heaters or things like that, like big capex type items, like especially if there were multiple ones? How did you end up dealing with that?
Honestly, man, you just figure it out. You know, so that's why like some guys do the business line of credit, the credit cards and the 0% interest and things like, I mean, I used a HELOC, but I mean, like I said, that's definitely what has slowed me down, just kind of um I guess cleaning up that in a sense to not build up too much debt and crap like that. So, and I think Frank kind of mentioned it. They've been trying to rebuild their reserves, some rehabs and stuff. That kind of all came at one time, and even like now, I mean, you kind of feel like things get a little stabilized, and then all of a sudden, shoot, what did I have recently? Shoots. I mean, maybe about 5 vacancies at one time or so. So you kind of feel like, all right, things are finally coming together, and then all of a sudden, just so happens tenants want to move out all at the same time, I guess. So it's kind of like, yeah, it's nice to have maybe your leases, what Dion like says in the winter. I don't know if he's experienced a type of weather in maybe Pittsburgh or Detroit or whatnot, but let's say all of yours conveniently end in the summer, which is and then just so happens that year you have 5 tenants that want to move out, right? So you're dealing with 5 maybe turns and So yeah, it's like Dion, they kind of talk about, right? I mean, it's the first 5 years definitely, um, it's one thing after another. You feel things are slowly coming together, and it just then the next thing. But yeah, you figure it out.
Hmm. Okay.
Yeah, I
So
mean,
it's business. Hmm.
honestly, I just wouldn't, you know, try as much as possible not to overthink things. I kind of, I kind of talk about it a lot. It's like kind of, when you have that first child on the way and you're reading all these books and things, and it's even, even like your house, right? A lot of people try to baby proof it as much as possible, and they're putting all these things around their house and gates up and everything. And then it's kind of, after you realize a lot of it was, in a sense, unnecessary to stress about or worry about, in a sense. So, do your best, like you're saying. You've done the work ahead of time, and you have this property now, and of course you're gonna try to stay on top of it as much, maintenance and things like that. But there's things that are just gonna come up that's out of your control, and as long as you have the reserves and stuff, that's the thing. You really just make sure you have the reserves, and don't go overboard. And like I always talk about, that's really what killed me, in a sense, or slowed me down, in a sense, that I got caught up where things were easy, in a sense, and it just kind of, it all hit you at once, as far as whatever maintenance is, or problems that come up.
Yeah. Okay, that makes sense.
Have you replenished your reserves, Mark? And how much of a reserve account do you like to have?
Yeah, I mean, like I said, it was, everything was like, yeah, right, things are coming together, and then the vacancies all happen at one time, and then you get all these little minor things, like little toilet leaks here and there. So they're not huge expenses, but they add up. And but yeah, I try to have, so my reserves is more the same thing with my HELOC. So it's not like in a savings account type of thing. But like I said, Hawaii has super favorable HELOC. So, I mean, I have a HELOC at 5.9% right now. So, that's helpful. And yeah, I mean, I have access to other funds if I need it, but it's more, I'd have to jump through some hoops and move some stuff around to really access it. So it's kind of, I'm not, I'm kind of on the lazy side, in a sense. So I don't like doing a lot of extra work, but the HELOC is more kind of my reserves, in a sense. And that's what I kind of just finalized. So, I mean, I had a HELOC from before, but I was kind of just waiting for the right time to move it again, in a sense, to a different bank. So I had one at 170, my HELOC. So I have one at 290 right now. I just got a new one for 290 at 5.9. Um, but I mean, I have a balance probably on it of about 180 still yet, but interest only. So I mean, I'm only paying maybe about $700 a month on interest on that one now. So, and then I just use that, and same thing. So that's part of doing what Jared does. So that whole velocity banking type thing, everything I get funnels through there to keep the balance as low as possible. So I pay as much least amount of interest every month, and then use that pretty much to pay everything. So everything just pays out of that account, and everything that comes in just funnels back into that to try and constantly keep that balance as low as possible.
Right now on that new one that you just set up, is there like a standard draw period? I know when I was looking recently, the draw period was 5 years.
So that's the thing. So this one is a 2-year intro rate. So the 5.99 is for 2 years. And then the plan would be to, when that's coming close to the 2 years. So same thing, like the one that I previously had was a same thing. I think at the time when I first got it, it might have been a 3% interest. The promo rate expired, so it probably went up to like 6 point something. But I was waiting to pay off some debt first before I reapplied for the next bank. So that's why I was able to pay off some debt to change my debt to income ratio. So that's why I got the 290 on the next one. So now the 5.99 is for like a 2 year promo rate. And then the plan would be, same thing, keep trying to paying it down, use it as a reserves, and then go and when that 2 year promo rate's going to come up, then I jump to the next bank, whoever has another. So that's what people are doing in Hawaii. They kind of go from bank to bank. But what people run into problems is usually, they use the HELOC as like a fun account, so they rack up the credit on it, the debt on it, and now when they try to go reapply at the next bank, they can't qualify for the same amount because the debt is too high or whatnot. So they have to pay a higher interest rate now. So the theory behind it is now when I go for the next one in 2 years, the property also should have increased in value. So I should be able to get a bigger amount on the next one. And now that I have more rental income also, my income should be higher. So the next round in 2 years, probably when I go for a HELOC, I think I should be able to get a line of credit close to 400K, I would think, somewhere in that area. And then, yeah.
And when you when you just recently redid your HELOC, there was a balance transfer from your first HELOC to this one also?
Yeah. So they just pay off the old bank, and then now the balance just moves to the next bank.
Okay.
Yeah. Sometimes you can request, and a lot of times they won't, but if your credit profile is strong enough, sometimes you can keep the old HELOC open. But because the line was so big, there was no way they could keep both open. But if you had a small like personal line of credit for like 20K, that one might be able to be kept open also to have just another line of credit. But yeah, so the balance just transfers over. And then it's like you can get a line typically up to 400K with no appraisal. It just goes off of the property tax assessment. Now, if you want to go over 400K, that's when you'd have to get an appraisal done on the property. But the only thing for me on my next one, because now that I'm renting out my house, I'd only be able to get 70% at the max instead of 80% because now it's not a primary.
It's an investment now.
Yeah.
So the HELOC that you've been working with in both cases was what was your primary?
Yeah. Yeah. But now that I'm renting it out, I mean, that's definitely gonna change my debt to income or my income ratio. So, like I said, I think in 2 years, I should easily be able to get the 400K or more on the HELOC if that's what I want to do.
Oh, nice.
You gonna go commercial in Pittsburgh?
I don't know yet. I don't know. I mean, I might just goof around and see how it goes.
Nice.
I don't know. Yeah, the single family home is pretty straightforward, so it's pretty I mean, I might do small multi, like 2 to 4 unit or something. But yeah, I don't know. I'm really debating whether I'm still trying to figure out what to do with my brother as far as the commercial property I have here in Hawaii.
Mhm.
So I'm not sure what's the best course of action. Because I'm thinking if I should just trade out my mom's so right now, like my parents' house and the commercial space, we would split it if anything happened right down the road, but that would still put it to where we're partners in a sense, and that's where I see I wouldn't say problems. It would be a good problem to have, but it would be like where I would have a partner in this as far as trying to maneuver, I guess. So I'm thinking like, should I talk to my brother and be like, hey, you just take whatever, if you rather have the extra portion in my parents' house, and then you're the majority of that, so that way you have all the say in that, and then I get the commercial space majority, or vice versa, and that way one person can primarily make the decision, yeah, instead of having
Mhm.
kind of like a partnership in a sense. So I don't know, but like I said, it's a good problem to have, right? I mean, at the end of the day, I almost feel like I might just leave it as is because it's kind of like my safety net for if any mistakes I make. I kind of have this fallback option. So I think that's why I'm a little also kind of shoot from the hip, a little less cautious as maybe some of you, as far as I kind of have that in my back pocket to fall back on.
Yeah, and it's like Dion has said before too, you want to make those arrangements while you guys are on good terms, right? Because if something came down later on and you guys weren't seeing eye to eye, it would be harder to make those decisions.
Yeah, that's what I was thinking about it. But like I said, at the end of the day, it's really kind of, I mean, if I leave it and we didn't do anything, and it would be still like, I mean, it'd still be, like cash flowing, or however you want, a good assets to have, right? So it's not like I said, it's a good problem to have in a sense, right? So it's kind of, it almost handcuffs me into a good situation, I guess, right? It doesn't
Mhm.
allow me to get too reckless, and then, let's say I do screw up and I lose everything, right? So in a sense, it's kind of, that's my safety net. So yeah, I might get arrested for OnlyFans, or you know commenting on someone on X, and then they get mad at me, and then
Let's see.
Did you go Section 8 in Hawaii?
no, I didn't. Same
Oh,
thing.
okay.
It
Okay.
was a kind of a, I told the guy, I said, your guys' process is so backwards in a sense where like I got to jump through all these hoops, and you're not gonna
Oh, yeah, yeah,
handcuffs
yeah.
and only. Yeah, it's kind of, it's a, I think if I was more, I wasn't in a rush because I kind of just wanted to get out already and transition to, because my mom's gonna have her hip surgery on Monday, so, or hip replacement. So I kind of just was in a rush to just do things, and I didn't want to deal with getting all the Section 8 stuff. So I think if I had more time, I may have gone the full process with it. Um, but so maybe next, or if or when these tenants move out, um, that would be the route, maybe just to see how it goes.
It's a
But when
great
I
time to have dry powder, though.
no, yeah, that's, I mean, like I mean, it's yeah, I mean, I mean, that I you don't realize how tired you get from doing nothing every day. As far, I mean, like I don't know, like I mean, I get tired driving my parents everywhere, and just,
Mhm.
it's a different tired, but yeah, like financially wise, I mean, it's like gonna just propel everything, like, I mean, night and day kind of thing. It's just like, um, yeah. I mean, it's probably, I mean, it's probably, I mean, she probably doesn't listen to this, but my ex is my biggest expense. I mean, she somehow thinks that she's welcome to entitled to more funds now. So, but
Jesus.
but even with that, I mean, it's still gonna propel everything a lot quicker.
But she can't, or could she legally ask for more?
No, I mean, I pay her way more than she is supposed to get legally, but it's more, part of it is more, I don't want my son to feel like, where it's like, oh, I want to go to dad's because we can do all these, we do these things, you know. So I
Mhm.
don't want that to be the case. And then it's kind of, I get it. I mean, I mean, she doesn't technically have to stay in Hawaii. I get it. It's a high cost of living and all that. So, um, but it is better for my son that she's here. So at the same time, I don't mind, helping her. And, I just wish it was more where, I don't know if entitled. I'm not. I don't want to say she feels entitled to it, but it's more just like, even like the pet, the whole pet issue. Like it's like she thinks like I don't like dogs and all these things, and I'm like, no, that's not the case. It's more, they're a lot of work, and you're saying you have financial struggles or you're having a hard time, and it's like, I mean, you gotta maybe get rid of the dog. You don't have, you're spending time walking the dog, or you got to find a dog sitter when you go travel to see your family. And it's just things like that. So, um, but yeah, I don't want my son to see her struggling too. So,
Those are all important considerations. Are, and I know we joke about you getting cut out of the videos, but all this stuff that you're talking about, is that okay to leave in the video?
oh, of course, man. I mean, I would have made more trouble if I knew I was going to get kept in this time.
That's why I waited till the end to say it.
No, yeah, man, I'm an open book, man. I got nothing to. I just hope that, like I said, I mean, I think you feel the same way too. Is just, hopefully our mistakes or our stories can help others, continue, no matter how much crap comes up, or no matter how much problems come, know that, it'll be worth it, and you just got to kind of push through it. And, um, there's no, I guess, easy way to do it. There's not, you can, like I said, you can always prepare, but there's always going to be something that comes up. And it's really, to me, it's really just figuring out how you handle it is going to be the what's going to set you apart.
Yeah, that's so true. And you've heard me talk about it too before. It's like you hope, because I'm sure on both our channels, we're hoping to help people learn from our mistakes and everything. But, like, especially this year, there have been so many things come up, and hopefully people don't hear it and think, why are these guys continuing if they have all these challenges? But I was telling Mikey the other day, I'm really looking forward to, in a year or two, to be able to reflect on all these challenges we've been through, and really show people, how we got through it, and that we didn't give up, and that kind of thing. I think that's going to be pretty powerful.
Yeah. I mean, I think that, even I think the hardest part is, I always tell the young guys at the fire station, it's kind of like, and I tell them, I'm definitely not the most motivated firefighter anymore. But my hope is that, and that they can financially see that how the job can kind of trap them in a sense, and that's hopefully it gets them thinking a little bit differently and realize that um, you know, as great as the job is, you don't necessarily need to work 30 years at it to have a great career. And some of them are realizing that. I mean, I'm, some of them may not be investing out of state, but they've definitely talked it with their family about building an ADU or building like a Ohana suite on their family's home or property, so that they can kind of start that journey of having, an extra unit on the lot or whatnot. So that's been nice to see that they've slowly started coming around to that idea.
Yeah, that's cool. You had a friend that joined us one time that had some units. I don't remember his name, but
Who's that?
They weren't, like, the properties weren't doing great.
Oh, yeah. He retired, so he's but he definitely thought it was going to be a lot easier.
Hmm.
And maybe I am the bad example for him, because maybe, like, well, not compared to you guys, because you guys definitely can talk real estate all day, or the analyzing of things a lot more than I do. But maybe me being on these calls, or maybe me, connecting with a lot of different people, almost like overwhelms people, right? Like, it overwhelms him to where, like, oh, I don't want to do all this extra stuff. So maybe from that standpoint, some people take it as if I got to do these things too. And I think in that sense, it may have turned him off in a sense, to where, like, I told him, you don't have to do what I'm doing, but you have to at least be talking to, people in your area, especially if you're in Hawaii and you're investing in Arkansas or Memphis, right? You kind of got to be building some relationships in those markets. And I think he kind of started doing that. He definitely was having a lot of property management issues.
Mm-hmm.
And so he finally switched property management companies. So I think things have been a lot better for him recently. But that's the one thing, right? I mean, real estate can be fairly passive, but I mean, you gotta put in a little bit of effort, right? I mean, you still gotta put in a little bit of work. And I think that's the thing he's starting to realize.
Yeah, I think no matter what your investment is, you have to care about it. You can't just, I mean, like you guys have said, unless it's like mutual funds or something like that you really don't have to watch every single day. But for all of us that have property managers, managing the property managers, and that takes some time. Some months it's not very much time at all, and sometimes, like right now, what we're going through, it is quite a bit of time each week. But you can't just let them go either. Because they have money to make, right? They're out to make their dollar too.
Yeah. You know what excites me though is when I see, like, Curtis and even Harrison, like they did, they've been on Ariel's channel and other, and I'm like, oh, and they don't even tell me they're gonna be on there. I'm like, what the hell? And I just see these videos pop up and they're all on there. The guy Hunter from school. And I'm like, but that I enjoy seeing that, where people are just connecting and starting to pop up on other people's channels and things like that. So, but
yeah.
Yeah,
that was a surprise to see Curtis pop up. It shocked me too at first. I go, man, this guy's everywhere now.
I know.
And I didn't see too much out of you over the past week. did you do less or just too busy?
Yeah, I've been busy. But I actually sprung for the Mac Mini M4.
Oh,
So I am trying to set up my stuff at home, and yeah, and I think that's gonna um hopefully it helps with the coconut wireless issue
mhm.
and helps with the stream. But it seems to, because when I did the speed test again, it was a huge difference.
No.
So it also could have been what devices I was using to stream on. But it seems like that's gonna help. But Mikey refused to do anything last night. He said he was too tired.
Oh, yeah.
But yeah, I wanted to goof around last night because I knew Thanksgiving was coming up. So, but I might try play around with it in the next few days to see how the stream goes. But once I figure that out, then yeah, it'll be a lot easier. Cause it's just a pain when it doesn't stream well. It's
Oh,
just
yeah.
frustrating. So once I figure that out, then I'll be causing a ruckus again. It was good to have Hyder on. I don't know if Hyder's still here, but it was good for him to pop on that other week. But that was a fun one.
That was a lot of fun. I had a great time.
Yeah, man, we got to do it again. And Jared didn't know what he was getting into. He just thought it was like he thought it was like no, he thought it was like a live for school or something. So he hopped on and he didn't know we were like streaming on YouTube and all this. And he's like, oh, like, yeah.
Yeah, that was a good one. Is that equipment that you're talking about? I wasn't familiar with it. Is that expensive stuff?
So Apple, they're pretty smart on their marketing and whatnot. So basically, it is their desktop version,
Hmm.
but you don't, you can get your own monitor. You kind of customize it to what your needs are. So basically, that's just the processor, the brain. And now, if you want a certain mouse, if you want a certain keyboard, if you want a certain screen, so I didn't. So the Mac Mini itself is maybe I think you can get it on sale for $499 right now, but $499 to $599, and then after that you just kind of whatever your needs are. So like I just bought a screen from Costco on sale. So I mean it was like I think 160 the sale price. But if you buy like the Apple screen, I think it's like $1,000. So there's different ranges, how much, how in depth the colors you want on it, and what you're gonna be like if you're gonna be gaming on it, you want the screen, So, I didn't spring for a big screen in a sense. So, and I already had a mouse and a keyboard, so it's not like I have to buy extra things for that. So basically I got a desktop in a sense for, $700, I guess, in a sense. Um, so, but yeah, the speed is much quicker.
Well, that's good. That'll be nice if it makes a difference for you. Because I know, yeah, that can be very challenging. I mean, not being able to hear you or, it going off and on while you're trying to do the recording and stuff like that. Well, you mentioned Mikey. If you ever need any test subjects, just let me know. I was thinking about you the other day because it was probably when did you start your channel? How long ago?
Oh man, I don't know. It's probably about 2 years. It's been I think I'm being suppressed or something
Yeah.
because I just put a short. I uploaded a short the other day, and it has like 2 views only.
Huh.
So I don't know. And but it does have your face that shows up on the short. So I don't know if that has anything to do with it.
Maybe
But
they just kicked you out for that.
yeah.
Well, no, I was going
But
to say because you were one of the first ones that I ever reached out to that, that was on YouTube and stuff like that. And I was so happy when you took my call. But I remember chatting with you. I was like I said, it was a couple of years ago. So how you know, how things have changed from that time to now. It's pretty cool.
Yeah, no, I'm having a lot of fun with it. I'm glad people still want to hop on and do it. I mean, I think it's just I think the challenging part for us is that we're not in that, I think COVID may have definitely helped some people's channels at that time because people weren't doing shit. So everyone was able to get into a schedule and routine.
Yeah.
And, maybe Zuber in a sense was connecting with more people that were already won the game or at that end game. So they kind of had this schedule to where they could consistently do a certain time.
Mm-hmm.
So, for us, I know especially my fire schedule, because it's always rotating, that it's hard for me to commit to a certain day. And that makes it a little challenging, but I'm always glad when whoever wants to, willing to do it can kind of hop on and what. So, but I also try to figure out who meshes well with each other, because we can't have a whole bunch of me's on there just making trouble. There has to be some knowledgeable people that are, like Hyder, that's spitting like information, right? Like useful information, so it can't just be like goofball, like so it's just also trying to find the right combination of people that kind of mesh well with each other or have different not different viewpoints, but just kind of maybe see things slightly differently.
Mm-hmm.
So anybody young, I put on with you because it's that different. I put someone younger, the old
It's
guy and the
somebody
young
really
guy.
old. Yeah. I
Yeah.
know. Well, I saw you jump in on my old guy meetup. I have about 10 people, so I'm want to reach back out to them and try to schedule, find what times work for them. Like you, that's the challenge, right? Because me being on the West Coast and some of those guys being on the East Coast, I'll do it whenever it works for the majority. But I just was thinking about that because of, the comments. Sometimes people say, am I too old to get started and things like that. And of course, we don't have as much time as some of the younger folks, but it is making a difference for us. And I was 57 when we restarted. So, and there's some guys in that group that are maybe a little bit older than me. Hard to believe, but I think that'll be a pretty cool conversation. And I'd like to record that too, kind of like you're doing it on, and maybe even do it live, but then put it on my channel and on school and stuff because most of them, well, all of them are school members because that's where I posted it first.
Cool. Are you gonna do a Denny's live stream?
I don't know. Mikey and I were talking about that, about doing some interviews and stuff while we're there with different people. It would be a good way to just, walk up to somebody and meet somebody new, that kind of thing while we're at the event. But yeah, I don't know this year if the big guys will be doing any recording like that while we're there.
Yeah, bring your Crocs, everyone.
I'll be the cameraman.
No, Mikey, we're gonna bust you out in Vegas, Mikey.
Yeah, gotta
No,
be in front of
I
the
like
camera for a change.
behind the scene.
Yeah, we'll have to figure something out. You're gonna get there early too, Mark, right? On Wednesday?
I have the same flight schedule as Mikey. Yeah.
Okay. Yeah, so we'll probably have to follow your lead on that because of our inexperience in the YouTube world, but that would be fun to record some stuff and put it out there for the rest of the ORAT group.
Yeah, I think it'll be fun. Yeah. Got to bring like spam to sample some different type of spam varieties. Sample on. Oh no, actually, like Vegas is a lot of Hawaii people.
Oh yeah, huh? Second Hawaii. Thanks, Ryan. We'll see you soon.
All right, Hyder. All right, Chester.
All
Well,
right.
hopefully I answered your question enough, Chester. Hopefully I didn't. But yeah, man, you have a lot of great resources around you, man. So, you'll be fine, man.
Yeah, no, definitely appreciate it. Guys, yeah, it's literally right now midnight on the East Coast, so officially I'm saying happy Thanksgiving to everyone. And sounds like even though Matt's not gonna have a live, we'll, I guess catch up probably over the weekend.
Don't forget to wake up for the Bears game now.
I will do my best, Mark. I'll do my best. Alrighty, everybody. You guys have a happy Thanksgiving, and I'll talk to you guys in a few days.
All right. We'll see you.
Happy Thanksgiving.
See
All right,
you
everyone.
later.
Alrighty, guys.
Thanks, guys.